extra 25 cents into your Acorns account, and it will invest it in various different ways that you can actually choose and modify a little bit, but it doesn't give you a whole lot of options with that. So like I was saying with Acorns fees, if you actually are a college student and you have an EDU email, you get it for absolutely free, and it doesn't charge you anything at all, and anyone can sign up free, but it does charge you a small amount per month if you're not a college student. So with Acorns, if their fees is $1 per month and any account under $1 million, and it used to be any account under 5,000, then it would charge you 1%, and I didn't like that because I was investing or planning on to invest thousands of dollars in my portfolio, and I didn't really want to be charged 1% per year, which might not seem like that much, but if you're getting up to that like thousands of dollars range and you add that up over time, that does end up being a somewhat significant amount in my opinion. But now they only do $1 per month, so $12 a year. That's really not bad in my opinion, especially for a brokerage that's kind of doing a lot for you. And once again, that's $1 per month under $1 million, and that says 0.25% per year over $1 million. And I doubt most of us are investing with $1 million, and it's free for under 24, and if you're in college. So I think that's saying if you're under 24 years old. So they're really trying to get a hold of college students who are young and probably are beginning to get into the career field perhaps, and who are trying to save up money, which is probably a good business model for them. And if you want to do an IRA, which is also new with them, they're an additional $1 a month, which is not actually that much, and especially since they're doing a lot of guiding and really helping you out along the way. I think that's pretty nice. And if you join right now, actually, if you use the link in the description, when you sign up, you get $5, and it's totally free to sign up. So if you're interested in the Acorns app, definitely sign up with the link in the description, or use anyone's link because you get $5 when signing up. So if you're signing up, make sure you do use someone's link. I don't really care if it's mine too much. The one in the description is my link. But anyways, how it works with the rounding up, like I said before, you could set it to any amount, but I think the most common amount is setting it to $1. So like I said, if you spend, I don't know, $1.75 on something, it'll take that 25 cents and invest it directly into your Acorns account. And there's also other ways you can do automatic deposits, as well as just depositing a set amount. And what's nice about Acorns is most brokerages don't allow you to only invest like a couple cents, or I should say deposit a couple cents in your portfolio, but they do. But if you're just depositing a direct amount, the minimum is actually $5. And I wouldn't be surprised if they decrease that, but I think why it's at $5 is because most of the people who use it are using it in the way where they're just taking the money automatically out, and they're not depositing like set amounts into it. So it's probably like costing them more money than they're actually making in that part of it. And I think that's really nice. And also another thing, if you're using an Acorns linked debit card, which I don't have, and I might consider getting if I start using the Acorns app more, they actually deposit a little bit more when you're using certain retailers with them, which I think is kind of cool and good for them as well. But next is how you actually invest your money and how Acorns invests your money, because they don't necessarily say it very explicitly on the app itself and on the website, but they kind of explain it in like really basic terms just by calling them like moderate or aggressive or conservative portfolios. But I'm going to go a little bit more in depth and explain to you what you're actually going to be investing in if you choose one of these different portfolios. So like I just say, you have basically 5 portfolio choices. One is conservative, one is moderately conservative, one is moderate, one is moderately aggressive, and one is aggressive. And they don't really explain too much how you're investing in those on the actual app, but and that really doesn't say a whole lot, just calling them conservative, moderately conservative, moderate, aggressive. It really doesn't say a whole lot. So basically what these are is whatever portfolio you choose, Acorns is investing in a series of ETFs. And what ETFs are exchange traded funds, and what those are basically like a company just creates this fund that puts together a bunch of stocks or bonds or like REITs or something like that. So they basically group together a bunch of investments for you and just put it into one separate fund. And ETFs trade like stocks on the stock market, and if you have like another brokerage account, you can buy ETFs, but Acorns chooses to only allow you to buy these ETFs, and they weight the ETFs in your portfolio in different weights depending on whether you want to be aggressive or more conservative or more in the middle moderate. So basically the ETFs that they have you invested in, and then I'm going to explain what the weights are in each portfolio, and you could just look that up. But anyways, the ETFs, what they have you invested in, the first one is large companies, which this is just all invested in stocks. This ETF is ticker symbol VOO. I actually personally invest in that ETF in my Robinhood portfolio, and this basically just mirrors the S&P 500, and I think it mirrors medium and large market cap stocks in that. So that one is an ETF that I personally like a lot. And the next ETF is a small company ETF, and this is another Vanguard one. The ticker symbol is VB, and it's similar to VU, but obviously just by the name of it, small company, it's investing in smaller market cap companies, and these might be seen as a little bit more risky, but might have potential growth upside compared to the large cap ones, because they're going to be growing probably a lot slower and a lot more consistently. But the smaller companies have potential to grow, but then again might not. They're probably not as consistent or have a long history. The next one you can invest in as well is VEA, and this is Developed Market ETF. And this one is kind of similar to another ETF, VWO, Emerging Market. So those two, obviously, from the names of them, once again, Emerging Market and Developed Market, both of these I would consider are slightly more risky. I would personally rather invest in an ETF like VU, but with the risk offers a little bit more upside in those, and especially with the emerging market ones. If you've been investing in any sort of emerging markets over the past few months or so, they probably haven't been doing very well, but those ones offer a little bit more risk, but also offer a little bit more upside. And being an ETF, they are relatively diverse, as are most of these. The next one's going to be a real estate one, and this is the ETF with ticker symbol VNQ, and this one invests in pretty much just, obviously by the name once again, a lot of real estate. So they're giving you that diversification of investing in different real estate stocks and companies, which I think is an important thing to have in any portfolio. And the next two are actually bonds. The first one, ETF, is LQD, which is a corporate bond, and the second one is a government bond with the ticker symbol SHY. So both of these are investing in bonds, and those are typically pretty safe to invest in, but they also don't offer very much growth. So if you're going more towards the conservative side, you're going to be a lot more bond heavy, while if you're going towards more of the aggressive side, you're going to be a lot more stock heavy, which be the large company and small company ETFs. So bonds are pretty much going to always give you pretty consistent profits, but it's probably going to be quite a bit lower than 10% returns per year, while the VU gives on average like an 8% return, and the small company I believe gives a slightly higher return. But the developing markets, emerging markets, real estate, those ones are going to be not the real estate, more towards the developed markets and emerging markets. Those ones are going to be a little bit more risky, especially compared to some of these other ETFs. And the real estate one, once again, is more seen as relatively like moderate, towards the conservative end of returns. So those are the possible ETFs that you can invest in, and each of these are going to be weighted differently based on what portfolio choice you do, from conservative to aggressive. Really whichever one you do is totally up to you. And I personally don't invest in very many bonds, and if you go on the conservative or moderately conservative side, you're going to be investing in a majority of bonds. So I personally prefer stocks, so I don't think there's anything wrong with going with a moderately aggressive or aggressive. Regardless of which one you choose, you're probably going to get pretty decent returns. I really don't think any of these are going to be getting you negative returns, just by looking at simply how the ETFs have performed in the past and how they're probably going to perform in the future, considering that they're pretty diverse ETFs with a pretty diverse selection of stocks. So I really don't think any of these picks are really that bad, but once again, that's just my personal opinion, and you should definitely do your own research before investing in anything. And Acorns themselves seem like they have a pretty good team over there doing some pretty decent work. But anyways, guys, that's it for this video. Like I said, if you're interested in the Acorns app, I put a referral link in the description. So if you click that link and sign up, you will get $5 when signing up. And I don't really care if you use my link or not, but definitely use someone's link when signing up, because that's just $5 you'd be losing out of. But other than that, guys, I hope you enjoyed the video, and let me know in the comment section if you have the Acorns app, use it, maybe plan to use it, anything like that. I personally am probably going to start using it a little bit along with my Robinhood M1 Finance portfolios, just to like save up a little bit extra money, and just to see how it is for, talk about it on my channel and for you guys as well. But other than that, guys, thanks for watching.